Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT methodology and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, today's date, March 24th. That's a Monday, first day of the trading week, and the markets are seeing some red. Now, the whole essence of this prediction for Monday was very simple to make. And I was on the radio on my radio show yesterday on 8:20 a.m. News Talk Radio talking about how the market should decline today. And I will reiterate it to you guys so you guys can understand it as well. And we had a bunch of shorts we initiated on Friday as well as over the last week or so, including one which I just covered today. And again, if you're a member, you just made a killing on Facebook, folks. Look at the drop on Facebook alone today, and we've been short since $70.15. Stock is currently trading around $64 right now. We just took our profits a little while ago, but again, an easy approximate $6 gain on Facebook here. Facebook technically is into a little bit of support if you look at the daily chart here, piercing the 50 MA. Ultimately, it's going to go lower, but I think you might see a little bit of a technical bounce coming in the not too distant future. But ultimately, look, gap window, pivot, and then gap fill. These are your next three stops on Facebook. But bottom line is more profits for members here at InTheMoneyStocks.com, plus all of our other shorts, which include such plays as, look at this, Adobe down $2.22. All right, take a look at Yahoo, another short we hold, down $1.40 today. Okay? And what's driving this market down? I mean, where is this market situated at this point in time? Right now, the NASDAQ is getting rocked, down 71 points or 1.7%. Dow's only down about 67 points or 0.4%. The S&P is kind of in the middle, down 0.75%, down 14 points. But the NASDAQ is getting rocked because of the biotechs, all right? 4 weeks ago, I was out saying, and I said this on the radio too, I said the biotech index is the bubble area. If there's one point in the market, if there's one place where there's a bubble out there, a true bubble much like the dot-com bubble in 99 to 2000, it's in the biotechs. And look at the IBB, folks. All right, if we bring up the IBB here, let me bring that up now. Look at the collapse over the last two trading days. This was 275 just a couple days ago. It is now at the low today hit 232. That's basically a $40+ drop, or almost 20% in the last really couple weeks. And it is hitting some support, though. Short term, you absolutely have some support here on the daily IBB chart. We scalped this in the intraday stock chat multiple times today. It was a great winner multiple times over. And again, you have a nice little level there, and sure enough, you've bounced off of that. So the biotechs are getting rocked. I mean, you can look at stocks like Celgene. Take a look at Celgene, the rollover it's seen in the last few days. Gilead Sciences, GILD. This is almost into an area where I'd be interested if it got down to the 200 moving average, but it's actually had a nice bounce. But that is where you're seeing it. You're also seeing stocks like large cap, higher risk beta plays, Priceline, down $47 on the day. This was down as much as $60. It got to $1,211 today before bouncing just a little bit here. It's up $9 off its lows. Netflix, look at this. Absolute annihilation on Netflix. So any stock that has a high beta is getting crushed. And high beta means that any stock that has high, it has a lot of volatility to it. Absolutely getting crushed today. All right, stocks that are performing better, old school plays, old school dividend payers. Take a look at Apple today. Apple is up $4.79. Why is Apple up today? Very simple. It is now a safety play. Money goes into Apple when the markets go lower. All right, now ultimately, if the markets are down 10%, Apple's still probably overall going to be down a little bit, but it's going to be down less than what the market is, which is 10% in that example. Maybe down 5% or 3%. Today it's actually awesomely outperforming, with the market down on the NASDAQ about 1.7%. Apple's actually up $4.50 right now. So I've talked about this for a lot in these videos. I hope you guys have seen my point proven over and over again, since every day we look at Apple, and that one is a beauty. Baidu today, down another $3. This stock has been hammered. Was 190 and change here, and it's now 155. Basically a $45 to $50 drop in this stock in the last couple weeks. So anything that's technology is getting roasted, but look at JP Morgan, up 50 cents on the day. JPM up 50 cents on the day. Beautiful move on JPM. Um, the bank stocks are the one safe haven as a sector today that I'm really seeing. Bank of America is down today, but down 25 cents, which isn't that big of a drop. And if you look at like Citigroup, let's take a look at Citigroup. Citigroup's barely down 15 cents on the day. But JPM is really the one leading the charge. Goldman's down a little bit on the day, down about 1%. JPM, again, the one recipient of a lot of buying pressure in the market today. All right, guys, so the profits continue to flow. When everyone else is talking about the markets going up, I know the levels based on the PBT methodology. It's a strategy, it's a proprietary strategy with calculations, and it tells us where the markets are going to top. And again, going back to the spiders, I want to show you how I knew the market was going to go down today. And really, honestly, it should go down most of the week. You'll have a couple buy the dippers out there. That's just the nature of the beast. But I want to show you this before we end this video because this is awesome. All right, simply put, go back to a week ago from last Thursday. So 2 Thursdays ago, we had a gap up right here, and the markets reversed. The following day, which was Friday, the markets moved down. They closed below on the S&P, the low from Thursday. That's called confirmation. Confirmation. That's signaling a change in trend. Then all of a sudden we came into Monday with a big bounce here and a big bounce Monday and Tuesday. So 2-day bounce. Where did it take us? Right back to this same pivot. Notice how we did not get above on a closing basis. That is humongous in relation to where the markets are going in the short term. So right now, again, guys, you can see that the market's there Tuesday and then Wednesday into the Fed hammered on that key pivot from the previous Thursday, never getting above, never closing above. Closing is what you really want to pay attention to. That's really the big deal. Okay? Then on Janet Yellen, the market stumped out. Then on Thursday, we rallied right back into that same level, hammering on it again. I mean, this is just an epic level in that relation because you can see how hard it is to take out this high. On Friday, we gapped up. We gapped above that level on the S&P, making a new all-time high on the S&P. Amateurs would say, oh, it broke. Pros know better than that. Okay, they know better than that because it's all about where the market closes. Intraday, who cares? It's whippy trading and light volume. They can flush the markets, push it above. Doesn't really matter. It's where the market closes. All right, and what happens? By the end of Friday, the markets reversed and closed below that same low. Notice how you never closed above that low, which was a confirmed short-term pivot top. Therefore, based on the reversal where the Dow was up 100 on Friday and went negative, based on the fact that it couldn't get taken out, this was a very bearish setup coming into today. Markets opened up slightly higher, about as much as 80 cents higher today. You had a great opportunity to short. If you listened to my radio show yesterday, you could have gotten in a ton of plays. I gave out all plays. I gave out 5 trades for this week, which you all could have had a beautiful entry on based on the opening to the upside today. They were short trades, and sure enough, all paying huge dividends on day one. Okay, and that's really where it comes down to. So beautiful price action and really easy. I hope you guys are all seeing as I'm doing this video how easy it was to kind of say the markets should go down here. And again, most people out there are bulls. They think, oh, the market can't go down. All right, all I'm doing is shorting the pops and covering down here some and leaving some on the table. And that's what I've been doing pretty much all year long. Late January, we saw the big decline. We were loaded on the short side. We made tons of money. Then we got out of some of our shorts, reshorted on the pop, and we've continued to do that, and now we're making a lot more money again. I mean, just look at the charts out there. Huge chart price action. So again, where does it leave us going into Tuesday? Well, basically, there's a couple keys I want you guys to know about going into the end of today and into Tuesday. Number one, this is a market area of support. Why is this support on the market? It's very simple. Take a look. There's a gap fill right here, which you just kissed, and that's why you've had this bounce. If we take out that low and come down to 184.30 and close below 184.30, that is the next leg down. Right now, you're at short-term support. As long as we hold this level, markets could easily bounce back up. If at some point we close below 184.30, it's game on for another $4 plus down on the SPY, which would be another 40 points. So that's just simple. Simple how to know. Now, ultimately, we're going to get below that down the line. I don't know if it will be today or tomorrow or Wednesday or Thursday of this week, but ultimately, we will take that out. And that's where you want to still have some of your shorts on the table to get paid beautifully. The move down, if it escalates, could be as much as 10%. The last move down in late January, early February was 7% at the max. And again, we should see a 10% move this time. That's the calculation that's showing me. Now, that's when we break those key levels. Okay, until we break them, they could keep this market around the highs, to be honest. I mean, they really could. Okay, so that's what we have going on here, guys. It is a fun market to be in as long as you know what the heck is going on. We do, our members do, and the profits are flowing. Come take the 7-day free trial. You want these trade alerts, you want them live, you want the text email alerts. Come join us at InTheMoneyStocks.com. Join the Research Center 7-day free trial and profit with us. I mean, hey, I'm here to give it to everyone who wants it. You want these trade alerts? Come get them. All right, we put out 3 on Friday, folks, all in the money. I covered one of my shorts today for, I think, a net 8% plus move on Facebook to the short side. I'm still holding on to a bunch of them, and we should get paid even more handsomely on those. Take care, guys. Come join us here at InTheMoneyStocks.com.